Market staging a late session rally, the Dow rising for the fourth straight day, just hours after President Trump called for lower interest rates and oil prices during his address to leaders in Davos. Joining us now is Tim Urbanowitz, Innovator Capital Management Chief Investment Strategist. Tim, it's good to see you. So we'd start there, Tim. President Trump addressing world leaders at Davos, making headlines, pushing for interest rate cuts, Tim. I think investors, listen, we're going to talk about it. It's a headline. I think we're trying to figure out how much it actually matters, Tim. You know, what kind of actual effect does that have?
Well, just I think those comments specifically around pressuring the Fed to bring interest rates down, at this point, it's just noise. I think it's Trump trying to sympathize with consumers and people that are dealing with the burdens of higher interest rates. But ultimately, you know, investors want to see the independence between the Fed and Trump. So ultimately, we see that as noise at this time around. And also, Josh, I think what's so interesting, if you look at the activity in the intermediate to longer end of the yield curve, since the Fed started cutting interest rates in September, we've seen the 10-year move 1% higher. All of those tenors have been moving higher. And it's very clear to us that the bond market is screaming at the Fed to stop cutting interest rates. So even if we did see the Fed shift to interest rate cuts, we don't think that's going to help really a lot of these parts of the curves that matter to investors and matter to consumers, because inflation expectations are going higher. Okay, they're cutting interest rates. That's putting a lot of pressure on. Maybe we do see this resurgence. So I would take that as noise, but also read the tea leaves, what the bond market is telling us.
Hey, Tim, give us a vibe check here this week, right? We had the inauguration on Monday. Stocks have mostly been up since then. We've had all of this activity on executive orders. So I guess talk to me about your sentiment read here, even with a lot of sort of uncertainty around certain things coming from the administration.
Well, overall, Julie, I think we've talked about this a number of times on the show previously. There's a lot of pro-business policies that are coming to the market, and I think investors are cheering the fact that Trump is pushing them. He's talking about them. He's working to implement them right out of the gates. I think that's all positive. And we look at what could potentially derail this momentum. It's any of those things not going through. But right now, the fact that he's pushing them is quite frankly very positive for the equity market. You continue to see the indices moving higher. Specifically, a lot of the comments that he is making around the investment in AI infrastructure, that we want to become the world capital of AI and crypto. That's very, very positive. I mean, in fact, you look at the inauguration, you look at all the tech cast of characters. There's clearly a lot of support for the U.S. tech sector, which is very important to this market overall, and investors are cheering that.
Next week, Fed on tap, also the start of big tech earnings season. Tim, which is more important to the market?
Well, I think they both matter a lot. I mean, we personally see the earnings season going to be a big tailwind for the equity market. I think when we look at the rate discussion, that's probably more of a threat than anything else, Josh. When we look at what could potentially derail this, what is the most relevant bad news? I think the inflation interest rate discussion is clearly one we need to be paying attention to. But ultimately, Josh, I think investors are going to look through that. They're going to focus on earnings. And if we look at the backdrop over the last year and the outlook moving forward, there's a lot to like. And I think these companies are going to deliver, and investors are going to cheer that. And at the end of the day, earnings drive stock prices higher. So that's what people will be focused on.
Well, and obviously also big tech got a lift from this new Stargate project that the White House announced this week. There is so much optimism built into this AI trade. Do you think that these companies are going to be able to deliver in this upcoming season, or, sort of at the valuations they're trading, is there room potentially for some pullbacks?
Well, Julie, that we have been bullish on this AI infrastructure trade for quite some time now, and we think it's going to continue. I mean, there's so much momentum even outside of this Stargate announcement that you see. You just look at the backlog of orders, companies racing to scale. It's so significant. I know there's a lot of skeptics out there. Are we actually going to see the $500 billion investment mark actually hit? Maybe we do, maybe we don't. I think what's more relevant is this administration is very, very pro AI. You look at some of the removal of some of the regulations that the Biden administration had in place, some of the guardrails under how quickly the tech could be developed. Those were rescinded day one. So I think that's what the market is focused on right now. You look at this investment, we ultimately think it will get there, but a lot of demand coming into this. This Stargate just adds more fuel to that fire. So I think main message, do not take your foot off the gas pedal when it comes to AI infrastructure stocks.
And is it just infrastructure, Tim, or if you're an investor, you're listening now, you want to play that mega AI trend, do you stick with the hardware? Do you look for software plays? Is it both?
I think it's all of the above. I mean, we have, in some of our, frontier tech strategies, we have a lot of the infrastructure plays. Ticker VRT, Veritiv Holdings, one of the top holdings in our ETF. Do a lot of the heat rejection cooling systems. We think those stocks are going to continue to thrive as the demand is just so strong. But it's really across the board. And I think, for investors that are potentially more conservative, looking to play the trade, your usual cast of characters, Googles, Amazons, are very strong ways to play it. They have other cash flows if something went wrong. But it's really the tide that's rising all boats right now, Josh.